Hey guys, in today's video, I'm going to show you what I look for in day trading opportunities and give you an update on how my 2019 results have been up to this point. Hey guys, my name is Akil Stokes, co-founder of Tier1Trading.com, the premier trading educational platform out there, and welcome back to another YouTube video. I am a former struggling Forex trader, stock trader and then Forex trader. I was pretty good at stocks, then I went to Forex to make a quick buck and realized that a quick buck took a long time to make. But eventually I learned my lesson, turned my trading career around to become a professional trader, and now I coach and teach others on how to do the same. Now, usually this is a video that I do showing you some of the opportunities that are on my radar to the week ahead, but this week I want to do something a little bit different. Now, in my previous video, not the video right before this, or not the Trading Coach podcast videos that also come out on YouTube, but in the previous video about 2 weeks ago where I was giving you some ideas on what to look for in the market, I believe we looked at the Euro dollar and I think Euro Aussie. We talked about how it's been an interesting start to the year, right? The market had some massive movements right before my trading year started, and really it's made the charts kind of messy. Add to that, we've got the government shutdown, we've got the Brexit issues going on, and it's really it's been careful footing in the markets, and we haven't seen the type of action that we're used to. And what I told you guys is that there aren't going to be as many swing trading, so as many longer term opportunities as we're used to, but there will be opportunities to do higher time frame analysis, really dial down the good trading pairs that are on our radar and look to take advantage of the intraday moves. And that's exactly what we've been doing in the markets. And this is a good example of being flexible, right? I used to have the mindset that you just learn one thing, right? Learn one magic strategy that works and it'll go on to make you profits forever. But as I've gained experience in the market, I've found that being a successful trader is more like being a successful athlete, or maybe a successful coach is a better example, right? You start off with a game plan, you have your style, you have your whatnot that works, but as the game goes on, you have to make adjustments, right? You see this happening and you have to be able to adjust and do that. You see that happening, you have to be able to adjust and do this if you want to find that long-term success. And, going through that in my personal experience has really allowed me to see that trading isn't just about finding a strategy. It just isn't about what to trade. It's more so about how to trade, having an understanding knowledge of price action and technical analysis. And if you've mastered that, it allows you to be flexible and really take advantage of any market condition that's out there. So what we're going to do today is I'm going to show you guys an opportunity that we looked at and ended up taking in the live trading room. Again, it starts with higher time frame analysis and not really seeing a lot, but dialing down to the lower time frames and really showing you how I look and what I look for and how I take day trading opportunities. Then at the very end, I'll come back and give you guys an update on how my trading year has been up to this point. Now, before we get started, because I know I'm always going to forget to do this, if you're new, make sure you subscribe, hit that notification button, the little bell here on YouTube if you want to be in the know about when these videos come out. I've been doing this thing called a premiere feature where this video is uploaded live, meaning that you can join me on the chat to your left and actually interact with myself, interact with other traders as the video is being shown for the first time. It's really cool. I'm on there as well, talking and having fun and whatnot. But also hit that like button. Hit that subscribe button. I said that already. Hit that like button, hit that share button. That's a massive help for this channel. Last year, this was voted the 19th best trading channel on YouTube. This year, I want to kind of go up and get at least 18th. That would be cool, right? Kaizen philosophy, continuous improvement. So that's the biggest thing you can help is like, share, and comment. All right, let's get into the footage. Let's delete our drawing tools and let's see what has Aussie been doing. And like many other pairs, not much. We did have a big wick. We did kind of retrace from that wick. We expanded off of that wick with a high momentum move. We're seeing the slow loss of momentum here as we slope out here. If we get a lower low, lower close on the day, right? A lower low, lower close on the day would be a decent sign for a potential retracement lower. Would be a decent sign for a potential retracement lower. Now the question is, if we're going to retrace lower, where are we likely to go to? My first anticipated level would be about 71 cents. You can look for, if you're a trend trader, you can look for a trend continuation opportunity here in the lower time frames for the Aussie dollar as well. We can go lower. If you guys can see these structure lows down here around the 71.50s, 71.45s, around that area. There is room to go lower. So if you find an opportunity either on a minute chart, like a lower time frame minute chart, not literally a minute chart, but like a minute base chart, or say a range bar chart to play a pullback in the structure, right? You see if we zoom out, you've got a little structure shelf right in this area. To play a pullback in the structure and look for a trend continuation trade down to that 75, or not 71.45, 71.50 level. That is an opportunity for any day traders. And that's going to be right at a 382 as well, which isn't that bad. So may want to put that on your radar as well. You'd have a little RSI swap as well. Yeah. So how you would want to play this? Any trend traders in here? Any trend following traders? Right? How you would want to play this is something like this. And keep in mind, I'm very aggressive on the range bar charts. So wait for this pullback, right? See if we can get up to this level of structure in the 382, right? Good level of confluence, right? Wait for that RSI to go overbought. Wait for some type of confirmation, right? Easiest or the most aggressive type of confirmed signal you can wait for would be what? Yep, a lower low, lower close. Again, you can wait for double bottoms or double tops and stuff like that. That would be more confirmation. That's going to be a little bit more conservative. You may miss the move, right? Wait for something, some type of lower low, lower close. I would approach it like this, right? So you enter next bar market after the lower low, lower close. Stops go directly above the swing. So you take the high, right? The high of that first candle, right? The candle before your entry candle, right? Get 1 to 2 ATR above that. So if you're on a 5 range chart, how big is your ATR? Easy on the range bar charts, right? Yep, 1 would be 5, 2 would be 10. Cool thing about the range bar charts, guys, you always know the ATR. Why? Because every candle moves the same distance. That's the real secret behind, for why I use them. I say all this mumble jumble about it's good for the eyes. You can catch the moves inside the moves. It gives you a different interpretation of the market. Secretly, I'm bad at math, and it allows me to really be fast with ATR stops because it's always the same. That's the real secret. I've been lying to you guys this entire time. But you get 1 ATR above here, right, with your stops, or 1 or 2 ATR above here, whatever your rules are, obviously, if you're using ATR rules, right? Which should put you, let's just make this realistic, right? If your candlestick high is right here, 171.82, a 2 ATR would put you at 92, something like that. So let's just use a 2 ATR the safest possible way. Obviously, 1 ATR would be half of that, right? So your stop loss is going to look something like this. Again, if you're targeting, however, what do we say, 71.50s, right? If you're targeting the 71.50 level, then boom, boom, bang, what's up with that thing? Your reward looks like this, right? So you see it's not bad, right? Now, we have that level. We're gonna take this next level for a second, so I hope you guys are ready. You guys ready for this? Who's ready? Give me a yes. Hoorah! Right, give me a yes. All right. So we have this level down here, and that was based off of the higher time frame structure. You can load up more days on your range bar chart if you want. But you have this level down here where we said, hey, 71.50, 71.45, right? We saw that on the 5-minute chart. You can see it on the 15, right? What we're looking at is this little area right here, right? Something like this. These lows, right? Because these are the next lows, right? We've broken previous lows. These are the next lows, this area, right? What can I do if I wanted to? I'm looking at this chart. I am trader A. I'm looking at this chart and I say, okay, I identified this zone of structure. I took it from the highest close or the lowest close to the lowest low right here. Identified this box. I'm looking at 71.54 to 71.46, a 10 pip zone. How do I know where in that 10 pip zone to shoot for targets at? What can I do? What can I do? I don't like this green at all. It's a nasty green. Dark green. It's like an Eagles green. Ugh. Eagles green. Sick to my stomach. Anybody, use your brain. Don't be shy. No such thing as a wrong answer. Or a bad answer. I wouldn't even say inversions. There's something much. There's a first step before even inversions. What about a regular Fibonacci extension? We got a beautiful impulse leg here, do we not? Look at this bad boy. Look at this long-legged creature. My goodness. Right? We got a beautiful impulse leg. This isn't a beautiful impulse leg, guys. You need to go back to the foundation course and study impulse legs. This is beautiful. It's a clear swing high to swing low. It clearly breaks 2 levels of structure. Golly. Look at the legs on this thing. Fibonacci extension. I get what you mean. I figured that's what you meant, Cody. Fibonacci extension, swing high to swing low. And what level are we going to look for? What levels? We're going to look to see if we have any type of Fibonacci confluence within that zone we looked at. That zone was what? 171.54? Did I draw it out? 171.54 and 46, something like that, right? Boom. And what do we have smack dab in the middle? $127 extension, right? Right there. Now, if we wanted to, it could be, and we'd have to do this later, Cody, right? Let's assume that we've had our little, what we think is going to be our turnaround we entered. If we want more confluence, we can then take a Fibonacci extension tool and invert it from this inside leg, this retracement. So imagine this outside return has completed. We can take it from the top of this, excuse me, to the bottom of that and look to see if there's any confluence. And maybe you get a 1618 down there as well. Right? But that's how we would pinpoint that target area. Does that make sense, guys? Perfect. Because if you notice, I don't know if you noticed in my analysis or not, and I did this yesterday, I start with very vague zones. I'm like an artist, right? What does an artist typically start with? I have no idea if they actually do this or not. This is how I start. I always start by drawing the outside, right? I always start by drawing the perimeter. Or let's say a master puzzler. I have no idea if professional artists actually do that. They probably just have at it, right? As a professional puzzler, right? I always start with the corners. Right? I find the end pieces, right? That's the only places that make sense to me. I know if I find if it's smooth at the end, right? I know exactly it goes somewhere. It goes somewhere on the perimeter. So I always start at the perimeter, right? And then I build in from there. I do the same thing with my trading, guys. I start with a zone. I don't really care the details of the zone yet. I just want to have an idea on where I think price action is likely to go. And then once I see that the trading opportunity makes sense, then I spend the time saying, okay, well, if I am going to take targets within that zone, where precisely should I shoot for? And I can tell you what, you don't even have to take that approach. If you're an active trader, you know what you can do? You can have that zone and you can use an if-then syntax in that zone. Meaning, we don't teach this, because I'm just not personally. I don't personally. Most of my orders and trades complete while I'm not in front of my computer. I'm not a fan of being a slave to my computer. But you can take orders based. You can take at market targets. You can use the if-then syntax in your target zone where you can actually watch price action and look for a reason to exit based on that. So just as you would look for a lower low, lower close to enter, maybe, right? If price action gets down to my kill zone, then I look for higher high, higher close to exit. Does that make sense? And you only exit basically if you get a signal in the opposite direction. Did I take it too far? I can't see your faces. You're taking notes. Either your boss walked through and you're trying to pretend like you're not in the live room, or you're fully focused. Those are the three typical outcomes. You're under your desk hiding from your boss, man. Praying that this is recorded. Don't worry, it is. Knock on wood. I don't blow it up. But seriously, you can do something like that if you want to. And that's again, it's a more active approach. You would have to be in front of your computers to do it. And what it will allow you to do is it will allow you to catch the bigger moves. So if you have a situation where you're taking targets and maybe they're conservative, and the times where the market runs through, right? And we've all had trades where it hits our limit order, we get money, and then it continues to run down, and you're like I know I followed the plan, I know, but so much meat on the bone. It'll allow you to catch those moves, and obviously there's a negative side of it as well. If you get a big V reversal and it pops up the opposite direction, which has happened to probably all of us before as well, you'll get stopped out for less targets than what you would have gotten. But that's the gift. I mean, that's the gift and the curse, the give and the take of doing it. So hope that makes sense. If it didn't, this is recorded. It's at the 42-minute mark, so you can kind of go back and watch it. Hey guys, Akil here. Just want to join you once again. It's about 8:30 Wednesday afternoon. Finally getting some time to do some post-market analysis / my pre-market analysis for the London session. Typically, I don't do it this late, but it's been a busy week. It's been a busy day. My schedule's kind of off, but I was looking at the two trades that we took today in the live room. One just hit targets here on the Euro Yen, which was a plus because it literally came a few pips from being stopped out. So obviously I didn't get the 33 pips that I was shooting for to begin with, but something is better than nothing, right? It's better than a loss. But the second trade I took was here. Actually, this is the first one that got triggered, but the second trade I want to talk about was here on the Aussie dollar. And I'm sitting here on the range bar chart. If you guys remember, in the live room, we were looking at this, and we dropped down to the range bar chart to look for a reason for entry. And the markets haven't been moving the fastest. The Aussie isn't the quickest moving pair to begin with, but it ended up getting triggered intraday. And I want to walk you through a little bit of the psychology and really the patience that is needed. I hate looking at this. We're going to take kind of the trade off. I want to give you guys a look at the patience that is needed to take this trade, and also talk to you about how I really made somewhat of a trading mistake and could have gotten involved earlier. So we shut down the live room about 10 o'clock, which was right here, and I was still in the office doing other business relating things for the trading education and whatnot, talking with clients, answering questions, all that fun stuff. And I was waiting for that lower low, lower close. And you can see we had our candle right here, which was about the close of live room. We then pushed up about 4 minutes later. We then pushed up about 3 minutes later, and I started really eyeballing this thing saying, hey, Akil, we may get this opportunity. Now, keep in mind, this is the range bar charts. And for you guys that aren't familiar with range bar charts, they aren't minute-based. So although it may look very similar to the 5-minute chart, these candles are printed each time the market moves in a range of 5 pips. There's no time association. So if it takes 1 minute to move 5 pips, then we'll get one candle in 1 minute. If it takes 15 minutes to move 5 pips, then we'll get one candle in 15 minutes. And what that means is that a trader has to be actively watching, actively engaged with this market or with this chart if they want to trade this time frame or this type of chart. And I started paying a lot of attention when we got this red candle, right? This could be the potential swing, right? Before that, we had bullish move, bullish move. Now we're getting that red candle right here, and it looked as if we were going to get a lower low, lower close right after it. So this red candle formed or ended at about 10:10, and I'm watching this. Immediately we went straight down, and I'm doing my count in my head. I know exactly what level we have to hit to get to 5 pips. I'm sitting there, my chart trader is open. I'm ready to click sell at market, sell at market, sell at market, and we're just dangling right here at a 5 pip range, but we're not passing that 5 pip range to complete the candle. And this takes a lot of patience because, it's tough to want to get involved and not be able to. And that's what we're sitting here doing. I'm like, come on, come on, come on, do it, do it, do it. And eventually, right, at the end of this candle, we ended up printing a green candle, which was a signal not to sell. And I'm glad I waited for that confirmation because guess what? It would have been a bad trade. Now, if you notice, again, this previous candle completed at 10:10. This candle right here completed at 10:37. So I was watching this candle for 27 minutes, only to have no signal. A little bit later, about 10 minutes later, 10:46, we printed this green candle. We then got our double top right here at 10:50. And then finally, our lower low, lower close here at about 10:54. Now, I'll tell you what. I ended up entering after this lower low, lower close right here at about 10:54. And as I reviewed this, I noticed that I should have been involved earlier. I should have been involved at this double top, which was a little bit higher, 71.83 versus 71.78, 5 pips, but it's principal more than anything. And I missed that entry. And the reason I missed it is because I got distracted, right? As I was on that 27-minute break watching the candles, I decided to start a podcast talking about kind of patience and the stuff I'm talking about now. And while I was doing that podcast, distracted from the chart, I missed an entry technique. Now, luckily, I have different levels and ways I can get involved. If one way doesn't work, I can go to reason number 2. If reason number 2 doesn't work, I can take reason number 3. But the point is, it's very easy to get distracted. Whether it's a video game, whether it's a movie, whether it's social media, what have you. Maybe it's a phone call. And if you want to trade, if you want to be an active day trader, I know we talk a lot about swing trading. If you want to be an active day trader, you have to commit the time to be actively involved in your charts. I was lucky in this situation to still have a reason to get involved, but we could have easily made the move without me. I could have easily missed the trading opportunity that I spent, hours and hours analyzing and watching and stalking and preparing for, all because I got distracted. And that's just not a professional act. So we'll see how this trade plays out. We're retesting the bottoms right here. If we can get a break and close below this level, that's a good sign that we'll see an extension down to that 127 Fibonacci extension level. We'll wait for that. But it's a pretty decent trade as well, or already. Stops are rolled to break even. I'll be able to roll stops a little bit further if we get that break. And depending on what time this happens, maybe I'll update you guys or not. But again, the point is, it doesn't matter what the outcome of this trade is. What I want you guys to pay attention to is the analysis that we use to get involved, and then the execution, the patience that it takes to actually involve yourself and pull the trigger and have a trade like this on the lower time frames. It's a completely different game than swing trading when you have 4 hours or an hour to or even days to kind of wait and prepare. So keep in mind, for you guys that want to be day traders, that's what you're committing to. All right, gang, Akil here. It is now Thursday morning. Woke up and saw that we did indeed rally down and hit targets on the Aussie dollar trade. So I'm very excited about that. It's funny, I've been pretty robotic in my trading and in control of my emotions, focused on process over outcome for many years now. But the one thing that still kind of gets my heart kind of pumping and all tickly and wiggly is when I hold an overnight position and I wake up in the morning and I get to come down and see what it did. And I don't think it's, I don't want to say I don't care about wins and losses, profits and loss. We all do. I don't care about it bigger picture. So it's not like I'm stressing out over whether it won or not, but I think it's just kind of an excitement factor, like the unknown, the fact that I get to rush downstairs and see if Santa Claus left me any presents or see if someone took them. So just a little more trading psychology for you, but a good trade. Took a lot of discipline. but it ended up working out in our favor. And these are the trades that are very rewarding because it makes you work. It just doesn't go straight there. I would still say this is rather pain-free. We never really went into the negative at all in this trade, so it's not the most difficult psychological trade out there, but it's a good example of patience in the process, patience in the process, patience in the process. If you do the work beforehand, right? And Marty Swartz in his book Pitbull said that he got a letter from a famous trader saying that 90% of the work is done before you ever enter the trade. So if you do the correct work beforehand and analyzing the market and setting yourself up and figuring out where are the optimal targets going to go, where is the best place for stop location, how am I going to enter, right? If you do all that work up front, the rest of it is easy. You just literally push the button, wait, then push the button to enter, and then you wait and watch and implement any type of active trail management if that's your thing. And then, of course, you stop yourself from making any psychological errors like moving stops back or taking targets early. I guess that could be considered hard, but it's not a lot of work from the technical aspect, right? So good stuff. So I hope you guys enjoyed that. Here comes the shameless plug. Warning. If you're interested in joining us, make sure you check out our 14-day risk-free trial. It gives you access to the platform. You're allowed to chat with our members on our community chat. You can join myself and Jason Greystone in the live room. You get access to our daily Trading Edge videos, our software, the emergence training course, the accountability sessions, blah, 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 blah. All the fun stuff for just $1. And we call it risk-free because there's no auto bill. It's not like other places where we sucker you in, and once you sign up, you get a surprise bill that says, hey, you didn't cancel, so now you owe us this much. After 14 days, it's canceled. You just lose access. You don't lose any money. Give it a try. It's tremendous. In fact, I had there was a trader I spoke to the other day. He was just finishing up his 14-day trial. Unfortunately, he's not going to be continuing with us, but he was talking to the traders on the chat, just sharing his experiences and whatnot, and saying how, how thankful he is for taking advantage of the time. He attended both the live rooms. He was on the chat. He got the most out of his buck. But one of the cool things that he said was, he said, Akil, the most valuable lesson that I got within my 2 weeks was watching you trade the euro dollar. If you guys haven't been paying attention, say to the podcast or just in the know, the euro dollar trade that we talked about, 2 weeks ago on this YouTube video, that came very, 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 very close to hitting targets for about 65 pips, and then boom, shot up reverse and stopped me out. And it stemmed a lot of conversation on discipline versus stupidity and all this stuff. And he said, the most valuable lesson from that was watching me do it live, watching the pain, the gut-wrenching pain of the euro dollar, snatching my heart out, twisting it and throwing it away. But then minutes later, coming right back and taking another trade. And that was a pound dollar trade that we literally took minutes after having our heart broken. He said that really gave me an opportunity to see what it looks like to be a disciplined trader, because I know that I would have made a mistake, but seeing a professional doing that was a massive help to my trading psychology. And I think that's big because we get asked all the time, hey, is this a signal service? And I'm sure we try to kill this culture, but I'm sure we get people that come into the live room or watch the Trading Edge videos and try to use it as a signal service. We purposely try to be as far from a signal service as possible because that doesn't teach you how to trade, right? It gives you a shortcut. And yeah, you can probably make money short term, but you're not going to have any of this psychological discipline. And what happens if Jason Grayson or myself decide to say, hey, we're done? Where does that leave you without a skill because you relied on someone else? So rather than that, we want to teach you the process of trading. We want to actually teach you how to develop the skills of trading and become a consistently and independent, consistently profitable trader on your own. That way you don't have to rely on anyone else. So I thought that was pretty cool. But it's been a great year. It's been a slow year, 2 weeks in so far. Took the first week off just to let things kind of settle down. But 2 weeks in so far, only about 6 trades. So it's been a slower year, but it's been a really good year. And it's been this close to being a great year. Out of the 6 trades, I think I have 4 wins, 2 losses. Profit factors in the positive, expectancies in the positive, average win, average loss, all that stuff is positive. I did make one trading mistake, which is a negative. That kills my goal of my goal each year is to have a 100% non-mistake or perfect trade deal, meaning that doesn't mean winners. It means that I follow my rules 100% for every trade. I already messed that up, so maybe I'll shoot for 99%, but that's the one negative so far. And again, it's been very close to a great year because two of the trades, right? One I'm still currently in right now that came very, very close to getting targets hit before reversing. Another trade that I was in, the euro dollar, was literally a pip or two away from being a big win, and instead turned into a good sized loss. So results could be even better. But again, what I'm happy about most is just showing traders, because everyone's complaining about the market activity, everyone's complaining about it being a slow year, showing traders how the disciplined trader will still find opportunities. And what I mean by not find opportunities, or wrong word, let's say not find opportunities. We don't want to find opportunities, right? That's what the undisciplined trader does. They go out there, they don't have the action, they want to get involved, and they just look and look and look and search and search and search. And if you do that for long enough, you'll find a reason. You'll find an excuse to get involved. It's like going to the store with the mindset that I have to spend $10. Well, I guarantee you'll find something in the store that you can spend your $10 on. Just ask my kid. We went and bought him a whole bunch of toys yesterday, and in preparation for this massive snowstorm that was supposed to come and lock us in the house for 2 days, and nothing happened, right? Want my money back. But good traders, right? We just do analysis. And that's what we've been telling our traders each and every day. Just come into the room, do analysis, go through the process, right? We all have our routine and our ritual of how we analyze the price charts. And I know it's boring and competitive, right? This, that, nothing. This, that, nothing. This, that, nothing, right? But for that one time where you do the analysis and you find that hidden trading opportunity, like in the video I just showed you, that's when it's worth it. Because you'll be able to take advantage of the opportunity, while others who got lazy or too busy looking on some exotic pair that they're not supposed to be trading in the first place, right? They weren't prepared to do it. They missed out on some money. And then we just go back in the process of waiting. And you can still have a phenomenal year. You just may not have the action that you wanted. And if you want action, become a gambler, not a trader. So that's how the year's been. Pretty good so far. I'm excited about continuing it. Tier 1 members, premium members, remember Q&A on Monday. Live room members, or you guys that are going to be signing up for the trial, because I know you are, because I give you all that cool stuff for just $1. I'll see you Tuesday in the live room, either the New York live room with myself or the London live room with Jason Greystone, or just be a beast and invest 6 hours and do both, right? It's only 2 weeks, so you might as well take advantage of it. But I hope you guys have a happy weekend. I hope you guys are safe. I hope you are having a great start to your trading year. Do me a favor in the comment section below. Let me know how your trading's been going. I'd love to hear about it. Who knows? Maybe you'll inspire a podcast episode. But until next time, plan your trade your plan. You guys take care, and I appreciate all the support that you've given us over the years.